Disclaimer: all my videos are for educational purposes only. I am teaching and explaining investment trading to everyone, but I am not giving out any advice. All investments are subject to market risks, so please evaluate carefully before you invest, as you may lose your investment. Hey guys, I'm back. So in my last video, I gave the breakdown of the 5 classes of investments and gave a little bit of history about all of them. So now in this video, what I'm going to be doing is I'm going to be going through all the 5 classes in much greater depth and give general details about all of them. So the first class of investments I'm going to talk about is stocks. So what is a stock, or what is a share in a company? To answer that, I will do it visually. Here I have 2 identical pieces of paper. One is a complete sheet, whereas the other I have torn to parts. So now let's assume this represents the company. Now the company issues shares, where each share represents a certain amount of the company. Here I have divided the paper into 4 equal parts. So each part represents 25% or 1/4 of the original company. Now, different companies issue different amounts of shares based on the valuation they've given to their company. So the way to evaluate the valuation a company has given is by multiplying the number of shares it has issued with the stock price or the share price it has determined each share to be. That is how you get the valuation of the company. So, talking about different kinds of companies which are there on the stock market, there are 2 kinds of companies which can exist. 1, privately held companies. 2, publicly trading companies. In privately held companies, the CEO and a group of investors hold all the shares of the company. There is an opportunity where the CEO can raise more and more amounts of shares to increase its valuation until it goes public on the stock market. There, when the company issues shares, then the money it raises comes directly to the company itself. Whereas when you look at the publicly trading companies, the shares are issued by the company and are traded freely by anyone and everyone on the stock market. There, the rules and the regulations of the stock market governs the issues of buying and selling of the shares. Over there, however, the money raised by buying and selling of the shares does not reach the company at all. Over there, let's assume that I am a buyer of a share and there is someone willing to sell that share to me. So the amount I pay for that share goes to that person and does not go to the company. So that is a major classification and distinction between privately held companies and publicly trading companies. So in general, this is how the stock market works, and much more detail I will be talking about all of this and different aspects of the stock market in my coming videos. So the next class of investments I want to talk about is bonds. So what is a bond? A bond is much more than just a physical piece of paper. It represents a loan given between a lender and a borrower, in which the amount and the duration is stipulated within that bond. In terms of the duration, there are 3 kinds of bonds. Bills, where the duration is less than a year. Notes, where the duration is anywhere between 1 year and 10 years. And bonds, which are typically more than 10 years. Bonds issued can be of two types: bank to government and government to government. The government to government bonds issued are much more vital and versatile, as those are the ones which keep an economy afloat. The US, as of now, is under a debt of $29 trillion, which is $29,000 billion. It is a lot of money, but this is how the US keeps its economy afloat. Now, talking about the bonds issued, every year different countries issue their bonds, and in the bond market, there is a lot of trading happening between the older bonds and the new bonds which are issued every year. Going back to the bonds issued, when we talk about bonds issued by a bank or a government, it is basically a promise the borrower gives the lender that after the stipulated time, the borrower will return all of the money back to the lender. But most of the bonds existing today are backed by some form of commodity, because this is generally considered a backup where if the borrower fails to make the payment in cash, then it can bank on those commodities to return the value invested by the lender. Most of the companies and countries which buy these bonds, usually the bonds are backed by the gold reserves of the country that has issued the bonds. But a fun fact, this is just a joke, so don't take this seriously. But the US, if you see a dollar bill, they say, "In God we trust." So they actually have a tactic where if they fail to make any of these payments of the bonds, they can actually state that we don't have any gold reserves. All our money is backed by God, so we cannot pay the bonds due. Even though the US has never used this tactic, but it's just a fun thing to note. So in this bond market, there is a lot of these things which goes on a day-to-day basis, and it's a very interesting field. All of this I will be talking about in my upcoming videos. So the next class of investments I'm going to talk about is real estate. So in real estate, there are two major classifications. One is physical grounds like office spaces, houses, buildings, etc. And the other one is REITs, which stands for Real Estate Investment Trusts. So in physical grounds, you get to invest in the actual physical spaces like an office space or a house or a flat or a typical ground also for like a football ground or a movie theater, something like that. And in terms of office spaces and houses, you can either make money on top of it, like renting it out or mortgaging it, or the other option is to flip it, where you redesign it and remodel it and sell it for a higher price than what you bought it at. REITs, on the other hand, is a different kind of in real estate investing. It is for those who do not have a lot of money to invest in this area but still want to. So they have this option to invest in these investment funds, investment trust houses, where they buy and sell all these office places and houses, and the money, the profits they make from that transactions trickles down to the people who have invested in them. There are a lot of regulations on these houses where almost 90% of the profits have to go back to the people, and that is why it's a very worthwhile option. Even though it's a very new and innovative space in this real estate investing, it is a very good opportunity for people who do not have a lot of money to invest in physical grounds, to invest in these investment trusts so that they can still get to enjoy and reap in the profits from real estate investing. So, not a lot goes on in the real estate investing business, but you can make a lot of money when you strategically buy and sell either in physical grounds or in these REITs. So, now I want to talk about the next class of investments, which is commodities. In my previous video, I had talked about the different commodities which existed at different times in this space. Like earlier, there used to be milk, cattle, and grains, which used to be used as commodities and payments. But they were found inefficient as they were perishable items. Then gold and silver were found and they quickly became popular, but then they were hard to find as they were very precious metals, and that is why then led to the emergence of newer and newer ways of payments, like now existing the paper notes, the normal currency, and now even more a bigger area, cryptocurrency. So, in commodities, one of the major topics to discuss is the environmental concerns about the commodities. So, like I discussed, there were different types of commodities like pork belly, gold, silver, grains, cattle, orange juice, and there is something also known as carbon credits, which is a very big environmental factor which plays into this commodities market. So, carbon credits are essentially where if a country is emitting too much waste in terms of carbon dioxide, nitrogen dioxide, or any harmful gas, then they give these carbon credits to a country which has fewer or which is able to recycle these harmful gases way easily. So that is one of an environmental concern which is now being played into these commodity markets. And some of the most harmful environmental concerns which goes around in these markets are things like oil extraction, which is becoming more and more of a heated discussion, because when we put these oil extraction fields on off-site areas and which is away from shores, then things like oil spills can happen and it damages the flora and fauna of our sea life. So that's a very heated discussion. And of course, our carbon exhausts, like the greenhouse gases which we are releasing into the air, that has also become a huge topic of environmental concern in this commodities market. So the commodities market is an exceptionally huge area and opportunity to develop in. And I'm going to be talking a lot more about this in my coming videos, so stay tuned. So we've reached down to the last class of investments, currency. So now there are two types of currency which are there in this market: normal currency or fiat, but don't get confused, it is nowhere related to the car company. And the second class is cryptocurrency. Now, things which fall under the normal currency are US dollars, Great Britain pounds, Indian rupees, things like that. Whereas cryptocurrency is the now Bitcoin, Ethereum, Litecoin, etc. When we talk about the currency market, there's a lot of heated discussion about whether the cryptocurrency is a better form of payment versus our normal money, like US dollars and Great Britain pounds. And what I believe is that this is a very good market to dive into, but it is very, very complex and very, very risky. So, unless you understand all the risk and you understand and evaluate how the market behaves, you should not jump into this market. But it is a very good opportunity to understand the thinking and the way the governments and economies of the world work. So, the currency market is a very, very varied and interesting area of investments. So, now I will talk about the cryptocurrency because that's become a very major issue and a medium of heated discussion in this cryptocurrency market. So, when we talk about cryptocurrencies, one thing we do need to realize is that it does have a significant environmental impact because we are mining them just like how we mine our gold and silver, and that has a huge impact on our environment. So, cryptocurrency is not very environmental friendly, contrary to people thinking that it is. So, one of the things that makes this world interesting is that there is always this heated discussion about whether the normal currency is a better form of payment or cryptocurrency. Now, I want to give you a fun fact about cryptocurrency. Everyone believes that Bitcoin is the first ever cryptocurrency to be launched into this world, but actually it wasn't. There were a lot more unsuccessful tries at cryptocurrency before Bitcoin was launched, and one of them did get marginally successful, something called as BitGold, which does not exist today, but another form with the same name does exist in some other market. But in general, this cryptocurrency and the whole currency market in general has become a very, very interesting area. So all of this I will discuss about it in my videos, where I will talk about the pros and the cons of this market, and I will discuss that how this market works and how it is an indication of how the world's economies and the world's governments run on that type of a scale. So stay tuned. So guys, this is where I leave you. I hope you enjoyed this video, and I hope you got to learn about the 5 classes of investments in much greater detail. I hope you liked all the tips and the fun facts I provided during this video. In my next set of videos now, I am going to be focusing primarily on the stock market and talking about all the terminologies and the various forms and what all is involved in the stock market. So now I am going to be focusing primarily on this one class of investments, which is the stocks and the stock market. So stay tuned. Thanks for watching, and I'll see you in the next video.